Hello everyone, welcome to today. Today is Tuesday. Just a quick overview of the market. Yesterday on Sunday, I shared a video of the weekly market analysis. So the Sunday video or the Sunday market analysis, basically it's for the entire week. It's a guidance for the entire week. But today I just want to make a quick preview of what is happening, especially for the DXY and gold. And like you can see in the previous in the Sunday's webinar, or in the Sunday's market analysis, we had targeted that DXY will come all the way to these levels. And you can see it has touched the first target. So we are looking at the second target here. Also, probably we anticipate that the DXY will definitely retest. It will definitely retest this trend line. Okay, so you can see it will definitely probably come to retest this trend line. So the next target we are looking at 102.944 for the DXY, and then probably now if it continues with the bullishness, then we might see if it continues with the bearishness, we might see the DXY come up to around 101.792. Okay, so on the upside, maybe probably we are anticipating, let me delete this. On the upside, we might anticipating the DXY to, maybe if it retraces on the upside, to come and retest this supply zone. We have a supply zone here, and then probably continue on the downside. But like you can see again here, we have inefficiency. So if it does not respect this supply zone, we anticipate the price to cover this inefficiency. It can cover up to 50% or maybe even more than 50%. But if it breaks this daily this 4-hour supply zone, we might see the DXY come to around 104.855 and then to around 105.644. That is on the upside. Okay, so we look at gold quickly. Look at gold. So this is what we had discussed about gold in the last in the Sunday's webinar. We had talked about this area of this side. It was resistant, and now resistant was broken to become support, and the market respected this resistance. Remember, we had marked this area in our charts, and also if you can remember very well, there we had a trend line, a very nice trend line. We had a very nice trend line along that area. So and in the 1 hour time frame, we had also identified these the daily the 1 hour demand zone. We had said that the gold might reach to these levels as it retests the trend line and continue on the upside. Okay, and that is exactly what happened. So if you mark this chart accordingly, then you must have taken advantage of the moves. Okay, so we had also identified this another supply another demand zone area, and the reason why we said that if it respects this one, should just go up, and we'll be targeting, this was our first target on the upside. Okay, so you can see it was flipped, and then now we said the next target shall be looking at on the upside is 203, around 203, then 209 there, and then 2022. That is on the upside. Okay, on the upside. So right now we might see a retracement. We might see a retracement for DXY because for the gold, remember this is a critical resistant area that is on the 4-hour time frame. So we might see a kind of a retracement. So what we might see is a retracement, probably back to this trend line. And now, if the trend line is respected, we see the upward movement now flipping again the 1993, then all the way to around 203. Okay, all the way to around 203, and then 209, and then 2022 in that manner. Okay, so that's if it respects, it retraces and respects this trend line. If it breaks out of the trend line, then we might see the retest, the breakout. Then price might come to this supply, to this area of support. Then we might see retest of the breakout of the trend line, and then now we see the prices maybe coming all the way to around 1960, around 1950, 1959, okay, 1960, 1959, basically to retest or to obey these demand area that we have along this region. Okay, so we have a demand area in the 4-hour time frame, and also it's a demand area in the 1-hour time frame. Okay, so it's bearish engulfing within a bearish engulfing. Okay, we shall talk about such kind of setup. Basically, we call them E plus E setup. When we have an engulfing within an engulfing, okay, it is very high probability trade setup. So right now, basically that's what we have for gold. And like you can see, let me delete this. So that's how you might expect the scenario to unfold for gold. So the reason why you want to mark again those regions that you have discussed and wait for the price to play out. Okay, you wait for the price to play out. So what we can see basically at the moment, we can see that gold is trying moving in an up channel, so it's creating series of higher highs and higher lows. Okay, higher highs, so this is the low, this is the high. Okay, so this is the lower high, then higher high, higher low, like that. Okay, so it's an uptrend. Okay, and we said this area of resistance here, it's what it's where the market structure break of market structure happened to initiate now the uptrend direction. Okay, so the reason why we are now looking at probably gold reaching to this probably retracing a little bit, coming back to this trend line and probably going up, or if it does not respect this trend line in the lower downtrend, in the uptrend, this trend line, the lower trend line in the uptrend, then we might see gold coming again to retest the support area to 1965, and then probably around 1960, 1957, we have a demand area. Okay, so that's a quick overview. Ensure that you mark again the charts, you follow the price, we see what the price does, because remember we are guided by the price. Okay, so the key thing is to mark those points of interest, and then we wait for the price to trigger our points of interest so that we can take the trades. Okay, so if you happen to get into the chart probably and find this kind of setup that the market has already probably left the region of interest, it's always not advisable to jump in a moving market. Just wait for the market to reach another high probability region so that you can be able to take a high probability trade setup. Okay, so basically what I'm saying is don't move, don't jump into a moving bus, because there are higher chances that you might injure yourself. Okay, so there are higher chances that you might incur losses, especially when you jump in a market that has already left your areas of interest or your points of interest. Okay, so maybe we can look at maybe GBPUSD. We can look quickly at GBPUSD. For GBPUSD, this is what is happening at the moment. Remember, we were waiting for the price around this region. Okay, we were waiting for the price around this region because we had the support that was broken. Now this side, we were waiting for the retest. Okay, we were waiting for the retest, and yes, it did not happen. We are still waiting, but you can see the price is still moving on the upside. Okay, you can see the price is still moving on the upside. So basically, what I would want to see now, probably I would want to see how this price reacts at this region. Okay, so you can see here we have a region of a resistant area. Okay, we have a resistant area. So this is we said this resistant or the resistant all support zone all support areas are not just single prices, but they are zones. Okay, so basically I want to see how the price will react to those levels, how the price will react to this level. So in case I see rejection to these levels, then probably we might see this GBPUSD going on the downside. We might experience a downside movement for GBPUSD, and if it goes on the downside, then our first target will be definitely the 1.24625, and then we shall be looking at 1.23759. okay, 23759, right? So basically we can see here the price is trying to attack these liquidities at this level because the origin, anytime that you're doing your analysis, it's good to identify the origin of the price. Okay, so we can see from this 4-hour time frame, the price originated from this level after it took out these lows here. So it took out these lows. You can see there was that week that took out these lows, and now the price came went all the way up, and now it is at trying to approach this critical area of resistance. Okay, so we want to see how it respects on this resistance. So if there is a rejection, then we anticipate the downward movement, and we said the target, we are looking at the first target 1.24625, then we are looking at 1.23759. okay, so if it goes on the upside, then once it breaks this area, we might be anticipating now we might be anticipating the prices to reach around so let me mark clear, this is the entire area. Okay, this is the entire area. So this side you can see it was support, then it was broken, and now the market it was retested, and the market is coming back again here for the second time. Okay, the reason I'm saying if there is a rejection, we anticipate the downward movement, this being our first target 1.24625, then 1.23759. okay, so on the upside, if this area is not respected, the resistant area, if the price breaks through the resistant area, then the first target shall be looking at around 1.26424, and then we aim at 1.27482. okay, so that's a quick overview of trading range for GBPUSD. And then quickly we look at EURUSD. Remember, I'm just doing a preview because I had a detailed analysis that I did for the week. So for for EURUSD, basically, we can see that it's trying to come through this region. Okay, so let me delete, but I don't want to delete this because these are the levels that we marked during the live analysis, that the market analysis that we did over the weekend. So you can see what we have at the moment is trying to break through this area that we had, this area of supply. You can see this area was retested. The reason why I said the second time is not a guarantee, but for the second time here, you can see it gave us around 70 pips, which is not bad. 70 pips, which is not bad. I usually tell my student, or I usually say that if, especially the beginner level, if you can be able to get 20 pips on a daily basis consistently, then that is enough to change your story. Okay, that is enough to change your story. So you can see there is a breakout. The market is trying to break out from this level from the daily time frame. So if it breaks out from that level, then probably we might want to see a retest in this region, and then before the price attacking the highs, you can see we have highs here at around 1.09928, That is a key area. Then around 1.1065, that is on the daily time frame. On the 4-hour time frame, this is what is happening on the 4-hour time frame for EURUSD. So you can see here we have a zone. Okay, here we have a resistant zone. Let me mark this clearly. So we have a resistant, we have a supply zone at that level in the 4-hour time frame. That is a supply zone. So we might be targeting the price to reach probably through this the supply zone, to reach all the way to this supply zone. So the reason I'm saying we might be targeting around 1.09923, and then we see how the price reacts from the supply zone. Okay, so if there is a rejection, then we anticipate the price to move on the downside, come on the downside, and the first level or the first target will be around 1.0958 on the downside. Okay, on the downside right now, as you can see, even though there is bullishness, but you can see the price, it feels like it's more of tired. Okay, so because you can see the type of candlesticks forming here, they're not much strong. They're not much strong. And also you can see the wicks from above, meaning that buyers are becoming exhausted, and therefore maybe probably this level you might want to see a reversal or a retracement. And we shall be targeting 1.08958, and then if it continues further, then we target around 1.08253. Okay, so if this area is broken, then it means that the price will go straight to these levels, 1.0650, where we have highs, where we have a high in the 4-hour in the daily time frame. Okay, so that's what we are basically looking at. Ensure also you watch the weekly analysis that I did on Sunday, so that you can, and combine with this one, so that you can be able to align yourself accordingly. Okay, so like you can see, I was waiting for a buy around this region. I was waiting for a buy around this region where we have the support that was broken, then waiting for the retest. But I'll still have this area marked in my chart, because I know this is a key area, and anytime the price will retrace to these levels, then it will definitely give me a setup. Okay, so the same case for GBPUSD. So I'll not delete my long positions, but now before it activates my long position, I'll be looking for any other probable entry based on what we have just discussed. Okay, so that being said, fundamentally, before we wind up, we have the CPI news for Canada. So it will be at 4:30. So CPI month over month, they're projecting an increase to 0.1. Then they're projecting the median CPI YY and a decrease, that is year over year, and then the trimmed CPI year over year, they're projecting a decrease. Okay, so for this kind of projection, or for this kind of fundamentals, you can see we have the way it is at the moment, it's kind of a mixed data. Okay, this is what we call mixed data, because CPI is projected to increase, and then the median and the trimmed CPI year over year, it's projected to decrease. So this is what we call mixed data. And once now we wait for the actuals. So if the actuals come negative, okay, if the actuals come negative, that is there is a decrease, then it means that the Canadian dollar will weaken. Okay, the Canadian dollar will weaken. So a pair like USD card will be a buy. Okay, a pair like GBP card will be a buy. But if the actuals increase, okay, if the actuals increase, then it means that Canadian dollar will strengthen, and therefore USD card will sell, GBP card will sell as well. Okay, so the reason why we need to wait now for the actual. So when the actuals come, basically how we look at it is that if the actuals are more than, for instance, in this case, if the actuals are less than the forecasted, then it means the Canadian dollar will weaken. If the actuals are greater than the forecast, then it means that the Canadian dollar will strengthen. Okay, will strengthen, because we said when there is an increase in CPI, we anticipate an increase in interest rates in order to curb inflation. So an increase in interest rates will definitely tend to strengthen the currency, okay? So if the results come out as a mixed data, let's say this one increases, and the two others decreases, then that is what we call mixed data, and it becomes quite a bit tricky to trade mixed data. So if you're a beginner, it's again good to trade when you don't have any mixed data, okay? Such that we have, when I talk about mixed data, is in a scenario whereby we have, there is some data that is positive and other data is negative. So those are the instances that you find that the market tries to create wicks, okay? But like I said, on Sunday, I'll be doing a detailed video on how to trade fundamentally the smart way, okay? So for now, this was just a quick preview, so I don't want to take much of your time. So thank you so much, and ensure that you mark those areas, and I wish you a Blue Tuesday.